Let's get more on the markets from Mike Dickson, Head of Research at Horizon Investments. Thanks very much indeed for joining us. It looks like tech investors are fairly on edge this week because we had the big NVIDIA numbers Wednesday, but it seemed as though there was fear in the market this morning that Microsoft at least is slowing its AI spending.
Yeah, you've really seen, a lot of these price for perfection names being quite sensitive to some of the news flow lately. Last week was no stranger to that. One of the best performers in the Mag 7, Meta, for example, was quite sensitive to some reports from Arista Networks last week about their AI spending, and you saw them sell off quite a bit. You also had, one of the AI darlings, Palantir, which has continued its several-day kind of slide, as it relates to some headlines around cutting back defense spending. And look, you've got NVIDIA this week. It really does feel like this mega cap AI trade is getting a little tired, if I'm being honest. And so I think all eyes are going to be on NVIDIA this week, and whether it's good news or bad news, I think the reaction to whatever they say is going to tell us a lot more about market sentiment and could provide some direction one way or the other, over the next month or so.
Yeah, as of today, the Mag 7 down about 2% so far this year. And Meta Platforms was still up about 15%, but NVIDIA flat. And all the others actually down slightly in 2025. So you definitely, we are seeing an apparent cooling there. What are your thoughts about the tariff news, the latest on tariffs? Trump threatening that the levies aimed at Canada and Mexico are going ahead. We're not seeing much selling this afternoon in Canada.
Yeah, it's interesting looking at that. I mean, I saw the headlines that were, just in the last 20 minutes or so. But even heading into today, you can look at, just what option markets are pricing in as it relates to some of these key tariff dates. And one of the things I think that's quite interesting is you really don't see the market pricing in a whole lot of, acute risk for, these deadlines and this deadline for next week. So I think that's the market telling us that it's more than likely to be a continued negotiating tool for that deadline coming up next week. But one of the things that I think is most interesting, Andy, as you talk about tariffs, I mean, China, the European region have also been massively in the crosshairs with these conversations. And when you look at year to date, both those markets have had one of the best starts year to date relative to U.S. markets, up well into the double digits. And it's been a while since we've been able to talk about the strength of the, broad developed international markets. But we certainly are seeing that to start this year, even in spite of, a lot of these negative tariff headlines that are causing some uncertainty in the market.
Basically, though, the U.S. economy doing pretty well, despite all the political to and fro and sound and fury. But so you reckon that a serious pullback in the market is unlikely with the economy ticking along fairly nicely?
Yeah, look, longer term, the backdrop's very healthy. Look, it's wild to think, but we, last week ended pretty poorly, but we actually hit an all-time high in the S&P just last Wednesday. It was effectively a string of down days since then. And we've, mostly finished up earnings season after this week, and where we sit with the earnings that we've gotten here, 90% plus through in the S&P, it was a really solid earnings season, with surprises coming in that 7 to 8% range on average, which is, kind of where we were most of the quarters in 2024. However, I think looking at the market reaction kind of tells you in the short term, things are getting a little shaky because, the market has just really failed to break out of this, kind of plus or minus 5% range bound area that it's been in since, since the election. And so I think it's going to be really important to see the reaction this week with the NVIDIA news. But to your point, I would not be surprised, if we saw a 5, 6, 7% pullback, in the market, just given, like we were talking earlier, consumer confidence has been pretty weak. A little bit of the recent economic data on inflation and retail sales, has also missed expectations to the downside. So shorter term, I think we could be in for a little bit of risk, but longer term, economy's on solid footing, earnings are on solid footing. So, any 10% plus pullback, I do not see in the cards. But look, volatility is very much in the numbers right now, and I would expect it to continue.
You say until there's an actual serious disappointment on profits, you just can't afford to be underweight AI and tech generally?
Yeah, I mean, when you look at the top of the market, they're continue to deliver on the earnings side, and you definitely have seen some repricing there. I think it's very notable when you look inside of the Mag 7, when you look inside of some of the software and services benefactors from that AI trade, the market's starting to get very selective. And what I mean by that is there's a pretty big bifurcation between the winners and losers. And I think when we look at that trade right now, it's really important to be quite selective in the exposures. And just buying NVIDIA, like we were able to do in 2024, I don't think is going to be enough. We're really going to have to look for those companies that are able to really deliver kind of a unique value add to the market as it relates to bringing productivity to the masses. I think an earnings report interesting to see along those lines this week is going to be Salesforce. They had a pretty strong Q4 reaction to that. I think that's a very good one to watch this week. And names like that in that software and services sector, to continue to see that handoff from kind of NVIDIA to the rest of the AI trade.
Oh, thank you very much indeed for joining us. Mike Dickson, Head of Research at Horizon Investments.